change to interest rates, despite a cautious tone from the Bank of Canada and a $25 billion federal stimulus plan. I'm here today with David Tulk, who is head of global macro strategy at TD Securities. Well, David, what was the biggest thing you got out of today's announcement?
Well, I feel like the Bank of Canada is trying to walk a very fine line. They've certainly seen a slightly stronger outturn in near-term data, and they also have that fiscal stimulus you mentioned coming over the horizon. But on the other side of the coin, they're really trying to manage a global economy that faces still significant downside risk. And that's a tone that we've seen taken from the Federal Reserve, for instance, as well as the IMF. So the bank does want to let that domestic support come through, but is very aware of the fact that if the international backdrop doesn't cooperate, they may be still in a very difficult position.
So then would you agree with their numbers that they changed a little bit weaker or a little bit stronger, pardon me, in 2016, a little bit weaker in their forecast for 2017?
Yeah, I think that's the right balance. Some of that 2016 strength has already been realized from what we've seen to start the year. It has been a very strong start for the economy, but some of that I think does feel like it's borrowed from the future. So to see Q1 revised higher and Q2 cut makes a perfect amount of sense. And then as you get a little bit over a longer horizon, taking into account that global weakness that has been quite pronounced, it should at some point start to filter through into a downward revision in their forecast, as well as some of the strength that we've seen on a relative basis in the Canadian dollar.
Now, they mentioned oil as one of the risks to their outlook. What do you see for oil going forward?
I think there's a couple of horizons to consider for oil. Over the near term, we have the meeting in Doha this weekend, which I feel may be a little bit disappointing. There was some expectation, at least, that Saudi Arabia and Russia would at least agree on a production freeze, but as long as Iran is not participating, and they haven't given very much indication that they are willing to participate, then it might end up being just more of a moment of weakness for oil prices over a shorter horizon. But we think that as the year rolls on, some of the favorable supply dynamics where we're seeing some cuts through the U.S. will start to lift the price of oil. And as we get to the end of the year, we could see WTI trading a lot closer to $60 a barrel.
And what about interest rates? Do we have any lengthening, I guess, of our outlook for interest rates?
Yeah, it seems that we're quite comfortable remaining on the sidelines here. I mean, that was a message quite clearly brought through from the Bank of Canada today. They did sort of reduce the horizon over which the output gap would remain in place. So a little bit more optimistic on that front, but we're really just talking about a very small adjustment here. So as long as we don't get the realization of a downside risk, which could be either from oil prices or the U.S. economy faltering, the path of least resistance for the bank is to just keep things the status quo.
And how about the loonie? Been on a tear the last few months. Where do you see it going?
Yeah, the currency certainly has responded to that stronger Canadian data, at least, as well as some of the improvements in commodity prices, at least from their lows relative to this year. So with the Bank of Canada more or less out of play, we will need to look at other factors to drive the currency. And from that standpoint, there does seem to be some momentum expected to drive it further. But we need to take a step back and also acknowledge that some of the positioning looks a little bit stretched, as well as some of our longer-term valuation metrics might think that it has moved a bit too far. And we always need to be careful when we see these very dramatic moves over a short period of time because they can become stretched.
So what is your longer term range then?
Yeah, I would expect to see at some point when we get to the end of the year slightly lower value for the Canadian dollar at this stage. I think it does reflect perhaps as well the Fed that will be able to hike by more than what the market thinks this year. It's not really something we see over the very short horizon, but as we get further out over that longer term, some of those themes I think will reassert themselves. So that's our thought there.
All right, so you're cautious as well, it sounds like.
Absolutely, it's the name of the game.
All right, thank you very much, David. I've been joined by David Tulk from TD Securities. I'm MaryAnn Devenney. Thanks for watching.